The tension between the U.S. and China is escalating like never before. A full-blown economic breakup between these two global superpowers may soon be unavoidable.
China and the U.S. appear closer than ever to a full economic breakup as their trade war intensifies.
But what does that mean for you? For your investments, your business, and the global balance of power? This trade war isn't just about tariffs, it's a battle for economic dominance, and it's reaching its boiling point. China's latest move has rattled financial markets once again, sending shockwaves around the world. But here's the twist. China isn't backing down. In fact, it's making a strategic play that could shift the course of the global economy. Is this the beginning of a new world order? Will China manage to break free from U.S. control? Stay with us as we unpack the latest developments that could reshape everything we know about global finance. Trust me, you won't want to miss this. The escalating U.S.-China trade war. The trade dispute between the U.S. and China has been simmering for years, but we are now in the eye of the storm. The U.S. has slapped tariffs as high as 145% on Chinese goods in an attempt to curb cheap imports and protect American businesses. The aim was simple: make it harder for China to flood the U.S. market with low-cost goods. On top of that, we've seen the U.S. impose export controls and clamp down on Chinese tech companies. But here's the kicker. Beijing isn't just sitting back and playing defense. Instead, China has shifted its focus and is now taking bold steps to claim more control over global trade. But now, the latest move from China has the world talking. There are rumors flying that China may have ordered its banks to halt all U.S. dollar transactions. But is that true? Let's dive into what's really happening and how it could change the world economy forever. What China's new bank directives mean for global trade. The buzz around China's latest directive is all about its central bank, the People's Bank of China, PBOC, instructing state-owned banks to limit foreign exchange transactions, particularly in U.S. dollars. Now, don't panic. This is not a total ban on the dollar. Instead, China has issued a window guidance to limit unnecessary dollar speculation. What does that mean exactly? Well, this move is aimed at curbing large-scale dollar hoarding and preventing short-term speculative attacks against the yuan. It's not about preventing you from using dollars. It's about ensuring the stability of China's currency in an unpredictable global environment. Why does this matter? A weaker yuan could help China's exports, but it also raises the risk of capital flight. By controlling the flow of dollars, Beijing is signaling to the world that it's in charge. It's saying we've got this under control and trying to avoid sharp fluctuations that could harm its economy. But here's the interesting part. It's also sending a message to Washington. Your dollar monopoly might not be as essential as you think. A new era for global finance? Let's be clear. China isn't just reacting to the U.S. It's actively reshaping the global financial landscape. For decades, Washington has held a unique position in global finance thanks to the dollar's dominance and its control over major financial institutions like the IMF and the World Bank. The U.S. has been able to use these institutions to exert economic pressure around the globe. But something is shifting. With China's economy continuing to grow at an unprecedented rate, Beijing is positioning itself as a serious contender in global finance. By 2025, China aims to have a nominal GDP of $19.2 trillion, or roughly $40.7 trillion when adjusted for purchasing power parity. That's huge, and it shows that China's influence is only going to increase. But here's the catch. While China acknowledges that it's a growing economic power, it's still positioned as a developing country in terms of per capita income. Why does this matter? Because China still wants to enjoy the advantages that come with being classified as a developing nation, like access to low-interest loans from international financial bodies. And that's where the U.S. is pushing back, demanding that institutions like the Asian Development Bank stop offering preferential treatment to China. But China isn't backing down. Instead of relying on the old financial systems, China is building its own. The Belt and Road Initiative and the creation of the Asian Infrastructure Investment Bank, AIIB, are just the beginning of China's plan to grow its own financial infrastructure. And let me tell you, These moves are not only reshaping the global financial system, but are also sending a loud and clear message to Washington. We don't need you. Will the dollar lose its global crown? This brings us to a key question. Is the US dollar's reign as the world's dominant currency finally coming to an end? The US dollar still dominates global trade, but China's growing influence is making people think twice. More countries are bypassing the dollar in favor of the yuan, especially for energy transactions and bilateral trade. While the dollar hasn't collapsed yet, the trends are clear. We may be heading towards a multi-currency reserve system where the yuan plays a much larger role. China's goal is ambitious but achievable. It wants 40% of its imports and exports to be conducted in yuan. That's about $3 trillion worth of trade. Imagine what that would mean for the global economy and the dollar's role in it. This could significantly reduce the reliance on the US dollar and strengthen the yuan's position as a reserve currency. What does this mean for global companies? The rise of the yuan is making things complicated for global companies. On one hand, the US is sending a strong message to businesses. Do business with China and you risk being hit with sanctions. But on the other hand, China offers a massive consumer base and businesses can't afford to ignore its market. Take Apple, for example. The tech giant has shifted much of its production to India to avoid US tariffs. But let's face it, Apple can't completely leave China. It's too important of a market. This dilemma is forcing companies to choose sides. Will they align with Washington or Beijing? And the truth is, it's getting harder to remain neutral. China's quiet wins and the global impact. As China's influence grows, its currency is becoming more widely accepted. Chinese companies and banks are already benefiting from the increasing use of the yuan in international trade and infrastructure projects. In fact, some central banks have already started to hold small amounts of yuan in their reserves. If this trend continues, it could lead to significant changes in global financial markets, especially if fund flows reverse. If the U.S. bond market were to experience a sudden shift, it could lead to rising interest rates and increased borrowing costs for the U.S. government. These developments could affect inflation, investment costs, and access to technology on a global scale. Conclusion: a new world order? So what's the bottom line here? The U.S. dollar hasn't disappeared yet, but China is making bold moves to reduce its reliance on it and elevate the yuan. The trade war is about more than just tariffs. It's a strategic tug-of-war between two global giants fighting for economic supremacy. As China strengthens its position, the U.S. will have to decide how to respond. Will it continue to use the dollar as a weapon, or will it adapt to a new multipolar financial system? The next few years will determine the future of global finance and who will ultimately dominate the global economy. It's clear that these tensions will affect all of us, whether we're investors, consumers, or companies operating internationally. The world is changing, and the outcome of this economic standoff could shape the global financial system for generations to come. So, what do you think? Will China succeed in breaking free from U.S. dominance, or will the U.S. fight back to maintain control? Let us know your thoughts in the comments below, and don't forget to subscribe and hit the bell icon so you don't miss our future updates on this evolving story. Thanks for watching, and we'll see you in the next video.